When a large downtrend begins to slow down, crossing trend lines summarize a stable recovery back to a declined double top range. The two minor upswings in August formed a noticeable uptrend line. This, along with the 55 to 53 range, developed the inclined neckline of a recently completed Head and Shoulders. The lowest uptrend line has a major impact in first slowing the Head and Shoulders drop. It then provides moderate to strong resistance in mid-October, due to the downtrend line from the Head and Shoulders intersecting with it. Then there is a gradual buildup of bullish volume and price action to form the basis of a steady and aggressive uptrend passing back over the neckline range within the same approximate trajectory as previous uptrend lines. Just after clearing to new highs, a defined double top begins to develop, but is currently having a delayed start for the second downswing, due to the 83 to 79 range offering temporary support to the growing bearish conditions. Although sustained increases in bearish volume drive under 79, the lower boundary of the double top range is not directly reached. Now an upswing begins to form to present a slight incline, and the greater possibility this bearish reversal range could fail. The double top drop does indeed fail, and the subsequent bullish continuation breaks over the upper boundary at the 91 to 89 range to form an ascending triangle. Interestingly, the prior inclined neckline's trend line neatly runs through the two upswings in the ascending triangle that present additional support potential to the 68.15 threshold of the failed double top range.